Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week, and we're going to start from the dollar index. This is the monthly time frame. So what we can see is the reaction of price at the sponsorship candle, and we had this bearish movement to the downside back into this bullish order block. To me, I'm going to consider this as liquidity pool, in which I'm looking forward to see how price is still going to trade to the downside into this fair value gap, and in extension we have this fair value gap. So this is more of a pointing of a long-term perspective. What we can see in the dollar index is that it is range bound. Price has been trading just within this range. Now here we have the bearish movement. The month of March gave us this bearish movement to the downside into this monthly bullish fair value gap. And what we can see now, price has created a monthly inversion fair value gap for us here. Now being the month of April, this is the month of April candle, and we can see the rejection to the upside. So clearly what I'm anticipating to see is the possibility of price giving us bullish movement to mitigate the monthly inversion fair value gap, and then we have our bearish continuation to the downside because price currently is reacting at this bullish order block from the monthly time frame. So let's check the weekly time frame. So here in the weekly time frame, what we can see is the identify monthly bullish order block. We can see this is it here, and we can see here in the weekly time frame we have this bullish fair value gap, and we can see how price return into that, and we can see the sharp rejection to the upside. Now this is the monthly inversion fair value gap. Here in the weekly time frame we have this bearish order block. So clearly from the weekly time frame perspective, what I'm going to look forward to is to see how price is going to trade to the upside. If price decides to trade further higher to take out this buy side into the monthly inversion fair value gap before we have the bearish continuation, then we're going to look into that. But what we can see clearly, we have this rejection. So we could see the possibility of price trading higher to the upside. If price violates this mitigation block zone, then we could see higher prices into the monthly inversion fair value gap before we have the bearish continuation to the downside. So let's check the daily time frame. This is a top-down analysis. I'm taking you through the process of how you can look at price and also utilize far lower time frame for the possibility of price giving you a reaction without necessarily returning to the higher time frame zone. So what we can see here in the daily time frame, clearly we can see that the tariff really affected the market last week. We had a lot of impulsive movements that we didn't really anticipated. So what we can see here is from the daily time frame, we had the bearish impulse here, price pullback. We called out this pullback into the weekly inversion fair value gap. Now here we have this monthly inversion fair value gap. So clearly now we can see we had the sharp movement to the downside, returning to mitigate the bullish order block in the monthly time frame, and also this fair value gap, which is from the weekly time frame. We also have that in the monthly time frame, but refining it will work with the weekly time frame. So what we can see here is price left this gap here. So I'm looking forward to see how price trades to the upside, filling up this gap here. So we have to wait to see the model that price will print for us here when price mitigates the zone, fills up the zone, and in reference we'll look in extension to this bullish candle before the bearish movement to the downside. So if price fills up this gap in the market that price created and possibly trades higher, then we want to look at the model that will be formed when price mitigates this zone. If we have the sell model, then we should look forward to continue bearish to the downside, except otherwise price further trades to the upside into the monthly inversion fair value gap before we possibly see the sell model to continue bearish to the downside. Let's check the 4-hour time frame, guys. So here in the 4-hour time frame, last week I pointed out this bearish order block to us, and I told us to anticipate a sell from this zone down to the downside into this fair value gap, and then we could look forward to see if price gives us a buy model, then we buy to the upside, and if price violates that, then we're going to see bearish fall to the downside. And clearly what we can see is the price just fell further to the downside. So we can see here we have this gap in the market. We have this liquidity gap. So we'll be looking forward to see how price continues bullish, filling up this gap. And then we want to look forward to see how price mitigates this zone, which we identify from the daily time frame. So if price gives us a sell model from this zone, then we want to continue bearish to the downside, except price decides to push more further to the upside into the monthly inversion fair value gap and create the sell model. But then I'll be looking to the zone, most especially when I see price filling up this liquidity gap here in the market. Then I'll be looking at the possibility of sell model, most especially at the zone in reference to this level where we identify the last up close candle before the bearish movement in the daily time frame. So this is what I'll be looking at in the DXY. So guys, let's check out the Euro USD pair. Here in Euro USD from the monthly time frame, what we can clearly see is, we've been making reference to the zone, price mitigated that and the bullishness into this draw liquidity, this bearish fair value gap. And in extension, we can see how price mitigated this bearish order block, and we can see volume closed below that. And what we can see is we have this monthly inversion fair value gap. So if price is going to continue to possibly dip lower before continuing bullish, because here now we can see we have this liquidity here, the buy side liquidity resting here as the probable next drawn liquidity, because what we can see is price took out this sell side liquidity, mitigated this zone, and we are seeing this bullish momentum. Then we have the inversion fair value gap here in the monthly time frame. So since price is reacting at this bearish order block, we could see sell reason to the downside. Possibly price may mitigate this monthly inversion fair value gap still within the monthly candle, the April monthly candle, before we possibly now see continuation to the upside. Let's check that in lower time frame. Let's go to the weekly. So here in the weekly time frame, what we can see is, previous weeks, 2 weeks, and last week I made reference to this inversion fair value gap and also this inversion fair value gap we have here in the weekly time frame, in reference also to this bullish weekly fair value gap, because the bullish weekly fair value gap was from this high to this candle low. And I told us the first mitigation we want to see is this weekly inversion fair value gap. And we could see bullishness to the upside. And we can clearly see price drop to the downside and give us this bullishness. And here we are, price mitigated the monthly fair value gap, fully mitigated that. And this is the monthly bearish order block level. And we can see here in the weekly time frame, we had this bearish fair value gap. So price traded more into that. And here we can see volume, rejection back to the downside. So here we have this bullish fair value gap here in the weekly time frame and this unmitigated weekly inversion fair value gap. So from the weekly time frame, and this is going to be the low. So if we're going to see the possibility of a bearish movement to the downside, then we could see price trade to the downside here into this weekly bullish fair value gap and possibly mitigate the weekly inversion before we have bullish continuation. That is looking at it from the weekly time frame, looking at this as a sell side liquidity. But what we can see here is we have this up close candle that sponsored this bearish movement. So we could see price return to mitigate this price level because we can see volume traded above that. So we could see price return to this level, and then we have the bullish continuation to the upside. So this is top down analysis. This is where we now get to the daily time frame. So here in the daily time frame, what we can see from the daily time frame is that when price mitigated this weekly inversion fair value gap, we can see bullish impulse to the upside. Now we have price created this bullish order block. We can see price return, mitigated a bullish order block and sponsored bullishness to the upside, taking out this high point. Here in the daily, we can see price took out this sell side liquidity we have here, and we can see bullishness that broke this high point. Now we have this return that mitigated this bullish order block, and the impulse occurred from here. So I'll be looking forward to see how price drops to the downside into this zone. So clearly, if we see price giving us buy model here, then we really would want to continue bullish to the upside. So this is the perspective I'm showing us from the daily time frame. We have price mitigated this weekly inversion fair value gap, took out the sell side liquidity, bullish impulse to the upside, breaking this high point. And you know, from the weekly time frame, we can see that we have buy side liquidity. Here from the daily time frame, we can see relatively equal high points, a buy side liquidity, drawn liquidity resting here. So we would want to see the model here. If price gives us the buy model here, then we want to get bullish to the upside here in the Euro USD. Let's check the 4-hour time frame. So here in the 4-hour time frame, so clearly in the 4-hour time frame, we can see that we have this 4-hour inversion fair value gap. You know, last week I told us from the forecast that we saw the bearish order block here, which I told us we should look forward to see the possibility of selling from the 1-hour time frame. And then we also identified this 4-hour zone, and I told us to see how price returns here. If price gives us a sell model, then we also sell from here. Else we could see price just continue bullish to the upside. And this wasn't really a movement we somehow really anticipated, but we can see price just give us this bullish impulse to the upside. So this was the effect of the tariff. So what we can now see is we have this 4-hour inversion fair value gap. So clearly now we can see price has taken out this trend line liquidity, mitigated this weekly inversion fair value gap, and we can see how price give us bullish movement to the upside. So you know, from the daily time frame, we identify the daily order block, the bullish order block, how price return to mitigate that. Here we can see this order block here, price mitigated that bullish movement. So here we have the pullback, the sell movement before this bullish impulse. So we have the 4-hour inversion fair value gap. So we may see the possibility that price may give us bearishness to come mitigate this zone, or react just within the 4-hour inversion fair value gap, and we have the bullish continuation to the upside. So this is my anticipation in the Euro USD. This is what I'm looking forward to see in the Euro USD, except otherwise price further trades to the downside. But clearly we can see here that price have mitigated this weekly inversion, and we are seeing this bullish momentum to the upside, breaking out this high point. So price broke through this high point. We have a valid break of structure here. Price took out the trend line liquidity. So I'll be looking to see the buy model here. If price gives us the buy model here, then we should continue bullish to the upside. So this is my view on Euro USD. Let's check out GBPUSD pair, guys. So this is GBPUSD, and this is the monthly time frame, guys. So what we can see is price traded into this monthly bearish order block, and we can see this rejection to the downside. What we have is the bearish movement here that's called sell side liquidity. Price mitigated this rejection block, and we can see bullish impulse to the upside. Price gave us this monthly inversion fair value gap. So we could see still within the month of April that price may trade into the monthly inversion fair value gap before we have the bullish continuation. Price has taken out sell side liquidity. So we have, this is the drawn liquidity, the buy side here, the external high points here. So let's check the weekly time frame, guys. So here in the weekly time frame, what we can see from the weekly time frame is how price traded into the drawn liquidity. This weekly bearish fair value gap, we can see the rejection, sharp rejection to the downside. So you know, we saw how price was giving us choppy price delivery, and I told us to see how price is going to take out the sell side liquidity, mitigating this weekly bullish fair value gap before we have bullish continuation to the upside. Price took out buy side, traded to the downside, failed to take out the sell side. So we still anticipated the possibility of price taking out the sell side before we have the bullish continuation. But what happened last week was we saw how price now traded higher, though from the lower time frame we framed entry reasons, entry zones. So we can see that price traded higher into the drawn liquidity, price traded back to the downside, taking out the sell side liquidity. But our anticipation was to see, based on the higher time frame, the rate of the sell side before the bullishness, but the bullishness occurred before price traded to the downside to take out the sell side. Now we have this inversion fair value gap here in the weekly time frame, which is in confluence to the inversion fair value gap in the monthly time frame. So we could see the possibility of price trading into this zone and then giving us the bullish continuation, because the inversion fair value gap now is within this weekly bullish fair value gap. So we could see price dip lower, and then we have bullish continuation. Let's check that from the daily time frame. So here in the daily time frame, what we can see is that choppy price delivery. We can see it here also in the daily time frame. Price build up stack of what sell side liquidity. Price traded have both this high points into the zone. Price return now, taking out the sell side, mitigating the weekly bullish fair value gap. Here we have the inversion fair value gap. So to continue bullish, based on the daily time frame also, we could see price trade lower into the zone. The weekly inversion fair value gap, which is also the monthly inversion fair value gap. If price gives us a buy model here, then we want to continue bullish. So I want to trade bullish to this rejection block zone first to see price reaction there before we continue bullish, seeing how price will take out the high points. Let's check the 4-hour time frame, guys. So here in the 4-hour time frame, what we can see is that price has taken out the sell side. You know, this is a stack of sell side liquidity, and price has taken out the sell side liquidity. You know, from previous weeks, I pointed out this bullish fair value gap as the zone I want to see price trade into, taking out the sell side liquidity before we see any form of a bullish movement. But what we can see is price traded to the downside, but then failed to continue into the zone. And then we had the bullish movement to the upside into the drawn liquidity. So we can see now price traded to the downside. Now what we can see is bullish impulse, bearish impulse, price taking out sell side liquidity, mitigating the bullish fair value gap. So we could see price trade bullish and give us bullish continuation since price has taken out the sell side liquidity. So we could just see bullish continuation, or price may dip more lower into the inversion fair value gap, and then we have the bullish continuation to the upside. So this is what I have to show us, guys, in the GBPUSD. So we could see the bullish movement may take off from this zone since price has taken out this sell side liquidity, or price may trade bullish and react at this up close candle before the bearish movement and then straight to the weekly inversion fair value gap, and then gives us what bullish raising to the upside. So I would wait to see how price delivers on Monday, then I'll begin to frame my perspective clearly from the movement that price will create on Monday. So let's check out the USDJPY pair, guys. Yes, USDJPY, this is a weekly time frame. You know, we pointed out the fact we had this bullish fair value gap, and we saw how this candle closed above. So I thought us to anticipate more bullishness into this rejection block zone, and we could see the possibility of bullish continuation to this rejection block level here. So in the daily time frame, we're going to see the clear structural perspective, the clear bearish structural perspective. So now what we can see is we didn't really have that bullish continuation. We can see price give us bearishness to the downside. And we can see how we had this candle movement to the downside below the bullish fair value gap, meaning volume traded to this low point, and then we can see volume traded back into the bullish fair value gap here in the weekly time frame. So we still have this down close candle here before the bullish movement to the upside. Here we had this down close candle before this bullish movement, so we could see price still trade more lower to the downside. Now we could see the possibility of a bullishness, and then we have bearish continuation to the downside into this price level. Let's check the daily time frame, guys. So here in the daily time frame, we can clearly see the bearish movement to the downside. So we can see the daily rejection block zone, which I pointed out 2 weeks ago, I think. Our price reacted here and gave us this bearish movement, though we anticipated to see the likelihood of bullish continuation to the upside to this zone. But clearly price just respected this rejection block, and during the tariff we could see the falling dollar, and that sponsored this bearish movement to the downside. So what we can see here is from the daily time frame, price is reacting at this bullish fair value gap. So we have this bearish fair value gap now here. So we want to see how price trade into this bearish fair value gap here, and then want to look forward to sell model. If we have the clear sell model, then we want to sell to the downside into this candle here. So want to sell into this candle. So want to see price react at this bearish fair value gap. We look forward to sell model, and then we continue bearish to the downside. Let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see is we can see the structure price fell, price return, took out buy side, price fell, price return, took out buy side. Inducement liquidity reacted at this zone, which is the daily time frame rejection block zone. And now we can see bearish impulse to the downside. Here we can see here we have this valid pullback, fell to the downside, liquidity here, inducement. So you could see price trade higher to the upside into this fair value gap here in the 4-hour time frame. Clearly we can see that in the 4-hour time frame. And here we have this up close candle before the bearish movement. This up close candle took out buy side liquidity. So for the USDJPY, so I want to see price trades to the upside. If price gives us sell model, then we want to sell further to the downside. So this is my view in the USDJPY pair. Let's check out the gold pair, guys. This is gold. This is the weekly time frame. So what we can see in gold is price gives us this bullishness. So, you know, gold has been heavily bullish. So I think with the tariff effects, so investors would seek to invest in gold. That is what I am thinking. You get it, guys? I'm not saying that is what is absolute, but based on research and understanding of some of these changes. So when the dollar is really being affected negatively, investors tend to invest more in gold. So this is the weekly time frame. We have this bullish movement that went through this bearish movement here we have here. So we can see now price give us this bullish fair value gap. We'll be making reference to this bullish fair value gap. Now what we can see is we had bullish impulse, but then we can see price traded to the downside. Volume closed below. Taking out buy side liquidity, volume closed below. So clearly from the weekly time frame, if you're looking to the drawn liquidity, it is this weekly bullish fair value gap. So it means that we want to see the possibility that price will trade to the downside into the zone before we have bullish continuation. That is based on the weekly time frame, guys. So let's check the daily time frame. Here in the daily time frame, clearly what we can see from structural perspective is that we have price give us this high, price traded to the downside, taking out sell side liquidity, giving us this higher low, price traded above, giving us a higher high point here. This is a higher high, price pullback, a higher low, price traded, a higher high. So now what we can see is price can regard this as a sell side liquidity. So the institutions are going to regard this as a sell side liquidity, and we could see price take out this zone and mitigate the weekly fair value gap, the weekly bullish fair value gap. Since here in the daily time frame, what we can see is this is the last up close candle that sponsored this bearish movement that took out sell side liquidity. This is a breaker. Also in the daily time frame, we have this bullish fair value gap within the weekly bullish fair value gap. Here we have this pullback here. This is the daily fair value gap, which I told us that we could see price continue bullish from here, and price gave us that bullish movement. But now we are seeing this bearish impulse. The institutions could take out the sell side liquidity, mitigates the weekly fair value gap zone, and then we have the bullish continuation to the upside. Because clearly now when we are looking at it from the perspective of structure, we can see here price took out sell side liquidity, bullish impulse. This is the drawn liquidity to the downside based on swing points. If we're seeing this bearish movement, so we can see price filled up this internal liquidities, this fair value gaps. Price is trading to the downside here. So we know the next drawn liquidity is the possibility of price taking out this low before we have bullishness. And when you backtest gold, you will see that most times gold reacts at fair value gap zone. So that is why I'm saying we have the high possibility of price reacting at this weekly fair value gap, which also we can see we have this daily fair value gap. So we want to be looking at the buy model that price would give us here, and then we continue bullish, except price decides to leave the sell side liquidity without taking it, and then we have bullishness to the upside. Let's check the 4-hour time frame. What we can see from the 4-hour time frame is this. This was the consolidation price level. We saw 2 weeks ago how price returned there, and then we said we could see bullishness because this is also within the daily fair value gap zone, and we can see that bullish movement to the upside. So what we can now see is we have bearish impulse now to the downside back into the zone. So last week I told us that if we were going to see bullishness from where price closed, which was this price level, and price decided to violate this bullish fair value gap, I told us we could see price dipped to this sell movement before the bullish movement, and then we have the bullish continuation. But then I told us that we could see again price continue bullish. And here we can see price give us bullishness to the upside. So now price has traded downward to the downside and further gave us bearish impulse to the downside back into this zone. So clearly now from the weekly perspective, we know we've identified a sponsorship zone below here. So if price doesn't really respect here for a strong bullish movement, then we could still see bullish reaction from this zone here. Price may give us bullish reaction to trade to the upside into this zone, and then we could see price continue bearish to the downside to take out the sell side liquidity, mitigating this fair value gap zone, and then we have the bullish movement to the upside. So clearly now from the gold pair, what I'm trying to say is this: we could see price trade bullish, so we want to utilize lower time frame, and we want to take our profits to this level here, then wait to see what happens here, because price may react here and give us bearish movements to the downside to take out the sell side liquidity, and then we have bullish model to continue now bullish to the upside. This is what I'm pointing out in gold. Then we could also see the possibility that gold may just continue bullish, since the reality is that from the higher time frame, gold is heavily bullish, guys. So we could just see this happens in gold, since we can see that price now has returned to the zone we looked at, the possibility of price returning to last week when we saw Friday delivery here. If price had violated this bullish fair value gap, we're looking at buying from this zone to continue bullish. But then price respected this bullish fair value gap and continued bullish. But now we saw bearishness to the downside back into the zone that would have anticipated a bullish movement last week. So we could see price react to it and trade to the zone. And then we could see bearish model to the downside for price to take out the sell side liquidity, mitigating this fair value gap zone we identify in the weekly and also in the daily time frame. And then we have what? The bullish continuation to the upside. So this is just my perspective. This is just what I'm pointing out to us. Let's check the 1 hour time frame. So when we come to the 1 hour time frame, what we can see in the 1 hour time frame is we can see that price printed this high point, broke the structure, but now we can see price drop to the downside, taking out this low points. So now we can see price reacting at that sell movement before the bullish movement that broke this high points when we check that from the 4 hour time frame. So reason why I said now we could see the possibility that we could continue what's bullish here to the upside. So we could see how price trades here. So price may decide to continue bullish. But since, we have this unmitigated zone and gold really has been reacting at fair value gap zones, then we could see gold now, after buying to that price level, we could see gold give us bearish model to the downside into the zone. Then we'll be waiting for the bullish model before we continue bullish to the upside. So this is just what I have to show us, guys, in the gold pair. And this is what I have to show us for the coming week. Cheers. God bless you and have a profitable trading week, guys.